please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV 18. I'm Ekta Batra and my co-anchor Prashant Nair will be with us very soon. Well, it's turning out to be a session where we have seen an intraday recovery courtesy what's happening with the macros. So, for example, we have the Nifty, which is back at 11,000 as we speak. And we've seen the rupee, in fact, recover from levels of around 72.9 odd on an intraday basis. So, it's currently at around 72.81. What it does tell you is that, yes, there has been an intraday recovery, but it seems as though things are still quite precariously poised at this point in time. We still have all of the NBFCs or the housing finance companies which are still declining. Case in point would be Indiabulls Housing Finance, which is down around 5.5%. And other stocks which seem to be on the downtrend include the likes of HPCL and BPCL, as crude rears its head on the higher side of 80. So that stock, those stocks should come up for you. Separately, however, there are a lot of stocks that we will be tracking. So Yes Bank, for example, is case in point. Stock is up around 4% ahead of that board meet, and that stock and news from that particular space is something that we'll be monitoring quite closely. Hi, Prashant.
Ekta, hi. So I think generally speaking, people are wondering whether this is just a bounce or this is whether this is something bigger. No answers, of course, will be forthcoming. The market will provide those answers as time goes by. But for now, this is extending. And it's a cautious kind of advance. I mean, because, selling, it's been so volatile. Selling has come in bursts over the last couple of days. And if you're going long, you want to tread very cautiously, take small positions, and make them bigger if it works in your favor, rather than, betting big and then sort of over trading, etc. So that kind of problem. But 63 and extending as we speak. The next couple of days, you got many events which are lined up, which I think are relevant from the phase the market is going through. So, Yes Bank board meet is today. You've got the IL&FS sort of shareholders meeting, which the RBI has called, which is on Friday. Then you've got the GST Council meeting over the weekend, which is on Friday and Saturday. You got the RBI decision on the 5th of October, which is the week after. And there is the global event as well, which is the Fed decision, which is tomorrow. So, and all these, I'm only referring to these events because they're all, in a way, one way or the other, tied up with events which have led us to this point in the market right now. So I think very relevant and promises to be a fair bit of headline risk, if I can put it that way, one way or the other. But that's where we are right now. 70 odd points higher, 11,037 on the index. Sudarshan Sukhani is with us. Let's bring him in. Let's ask him what he's making of things. Sudarshan, morning. What's your sense of the market now?
Yeah, good morning. My sense is that today was a panic selling morning, and it is possible that at least a short-term low has been made. The key word here is short-term. It is very early to say whether this is the end of the decline, and I very much doubt it. So it appears that for the time being, the markets may stabilize around 11,000, and whatever trades come around that stable level should be taken. Small dips can be bought and small rallies can be sold. This is probably not the end of the decline, but for the time being, stability should slowly creep in. In that sense, there are buying opportunities finally coming in this market, thanks to the fact that I have a sense that we are going into a stable environment. The buying comes in sectors which are already outperforming. Pharma, Divi's Lab is a buy. Every day I keep on giving a pharma stock simply because pharma keeps on going up. So that's a sector where traders should be in on the long side. And the second is IT. Yesterday we had TCS as a buying opportunity and it went very well. Today we are discussing Infosys as a buy. Infosys has almost similar charts, a little underperforming, but it could easily catch up. So Infosys and Divi's Lab are buying ideas for the day, and Z Entertainment is a short sell. It's in a bear market of its own. Again, I'm repeating, it does appear that panic selling in the morning may have put in a short-term low.
Okay, fair enough. Well, Sudarshan, we have a question for you from Twitter. Bishal has 100 shares of Colgate Palmolive, which is bought at 11.50. Wants to know the view.
Well, I'm no longer very upbeat on FMCG as I was earlier. There's been a big and stupendous rally in FMCG, and Colgate unfortunately underperformed in that rally. So my view is that whenever you get this opportunity, you exit Colgate and switch to pharma, IT. If you want to stay in FMCG, switch to Hind Liver, but in any case, exit Colgate.
Sudarshan, we'll speak again. Thanks indeed for your time. Gaurav Bissa, derivative analyst at LKP, is also joining in. Gaurav, what's your sense? 74 now on the Nifty.
Good morning. 11,000 call option had a lot of writing. If you look at the option chain, 11,000 put option commands a very high concentration, in fact the highest concentration. If we are to close above 11,000, there can be some short covering rally towards the level of 11,150, 180. This is the level from where we saw some incremental shorts getting built. Crucial supports were earlier placed at 11,180. So now it would be resistance at those levels. So relatively 11,180 cannot be ruled out, and that would be the approach to the market. As far as stock specific data is concerned, Infosys is one. I agree with Mr. Sukhani that it has bounced back from the lower levels of 700 and now looking quite poised towards level of 745, 750. One can keep a stop loss of 710 and buy Infosys. Motherson Sumi is looking quite interesting. Good amount of short covering has started, bounce back from the crucial support levels. Breakout on hourly charts. 270 is what one can expect. Stop loss of 253, and PVR is looking weak. Consistent short positions getting built. Multiple support levels have been broken. Stop loss of 1295, targets of 1250.
Okay, Gaurav, thanks very much. Appreciate you joining us with that opinion. 75 on the Nifty, as we sort of pointed out. Just want to highlight, because I think we should stick with what's happening in this pullback as well. It could be just a bounce, but let me highlight the NBFCs. So it's very clear. I mean, I think the point which was made earlier is pretty relevant, that maybe the broad sort of across the board sell-off may be behind us in some senses, and it could be more differentiated. So troubled names are down. Indiabulls Housing is down 5. You've got Dewan Housing, which is down more. I mean, some 14-15%. The last I checked was down. I mean, actually, it made a low of about 301 today on the futures. 333 now, 15 lower. But you look at on the other side, stuff like M&M Finance. We had the management up on the channel in the morning. You look at Bajaj Finance. So, you know, there is buoyancy. So, two ends of the market. For the last 2 days, we had everything blanket which was selling off. Look at Piramal. Piramal, for example, yesterday sold off 10% right into close at 330. Piramal is bouncing back a little bit. So, I'm just highlighting some of the sort of better regarded names. Chola Finance comes to mind. Bajaj Finserv, which is the holding company for Bajaj Finance. I mean, so there is a fair bit.
The other one actually which comes to mind is Motherson Sumi. That stock is down 30% year to date. You're seeing a little bit of respite which is coming on that one. So up around 3% for even something like a Motherson. But do keep your eye out on Interglobe as well as Jet. Both those stocks are now at the low point of the day. Again, that big crude impact which you can see on both those counters. We'll do one thing. We'll get in some opinion. Credit Suisse expects mutual funds to increasingly reduce their exposure to the sector as MFs are key providers of liquidity. We spoke to Ashish Gupta from CS Credit Suisse earlier today, and he's of the opinion that concerns on liquidity crunch are over-exaggerated.
I still believe that the overall liquidity situation at NBFC is still fairly manageable. We have seen in the past RBI coming in and at the time of crisis on liquidity, putting in steps like opening up the repo window for the mutual fund, etc. So I think concerns that this liquidity constraint will cascade into distress into NBFCs is probably exaggerated. On the corporate asset quality side, we have made very good progress in terms of recognition. More than 80-85% of corporate asset quality stress is recognized. For sure, NBFCs will see a higher increase in funding costs relative to the banks, and therefore it is important that if they are in a product segment where their competitors are banks or other NBFCs.
63 on the Nifty, 11,030 is what we have right now on the index. Manisha is here with the one big talking point as far as global macro variable is concerned, which is oil prices and the advance we've seen in the last couple of days, especially overnight. Manisha, morning.
Thank you so much for that, Prashant. I mean, we crossed 80 and 81 in a day, and that's the kind of gains that you've seen come in for the crude oil prices. Newer highs, 4-year highs actually for the Brent prices. And it has been about the fundamentals which have been building up on the stronger side, right from Iran's sanctions deadline nearing, inability or not willingness from the OPEC and Russia to increase production, the US crude inventories continuing to decline at a 3-year lows now, and the demand estimates on the stronger side. So those are a few factors actually which have continued to support the crude oil prices on where they trade at this point in time. Jonathan Bharat now joins us to talk more about on where the crude oil prices could be headed. Jonathan, hi, good to have you. While the fundamentals have been strong, what is scaring the markets really is the reports that have been coming in from banks and oil merchants forecasting crude oil prices at 90, 95, 100. What is your sense? Because this clearly leads to a lot of bullish positions by the speculators.
Manisha, good morning. Look, when you look at all the reports, everyone has this one concern. The global economic picture is looking okay for the time being. And as a result of that, we don't have that supply to meet demand. Taking concerns, I guess, when you look at the inventory levels in the States, yeah, that just does tell us that we have an increased demand. Then take out Venezuela and Iran, and also what OPEC and Russia are actually talking about at the moment, then you get this picture that supply tightness will continue. And that's why we feel prices from these levels still have a fair way to go on the top side. That is, of course, we get those daily closes above those important areas. And I think we just have to wait until we see those breaks. Obviously, Brent is pretty much through that level, which indicates higher prices.
So what's your sense on the crude oil prices from here? Do you also belong to the camp which is expecting prices to spike up from here, 85, 90, 95, pick your pick?
Yeah, look, I think the initial run, I think, is there. I think Donald Trump and his tweets have come to the market and said, well, prices can't be at these levels for too long. I think the OPEC and Russia are playing a business game here where, you know, they will say they have the capacity, and we know they do have that capacity, but they're not playing fiddle to Trump's, tweets. So quickly. So, but I think at the end of the day, they will. And I think you'll find that Saudi or OPEC and Russia will come to the party and increase capacity. But there's got to be a little bit of a game in it.
So, Jonathan, what is the range that you're working with? Because I'm just pushing that number in. What is your sense? What is the range for rest of 2018? How do you look at the first quarter 2019?
Look, I would like to see first quarter 2018 as prices stable off, if not a little bit lower. I get a sense when I'm looking at the immediate market, 75 on WTI hasn't been broken yet. And that, to me, signals a move higher for the WTI contract. The Brent contract has already broken through those levels, up through that 80, 81. So if we get a weekly close above those areas, that does signal a move higher. But I get a sense that there are some, I guess, supply problems out there. But I also see demand destruction around the corner if prices move continually higher. And that, to me, is the real concern. Because if you do get those developing economies that don't kick off, that they do have some cracks, well, then you'll see supply overmeet demand and prices go lower. So 2019 quarter one, I'd like to see prices around this level, if not lower.
I just want to throw a couple of scenarios as well. And do you think that could bring the prices down? One, of course, is the global growth concerns, especially what's happening with US-China. Do you see that impacting demand? Do you see the US midterm elections bring the crude oil prices down? Do you see consumers pause a bit, bring down imports with the crude oil prices on the higher side? How do you see these three scenarios play out?
Well, when I look at the US-China trade talks, and I look at some of the other commodities as well, it sort of impacted the likes of copper, but it hasn't impacted, the likes of iron ore and steel producing. So I think to really need to some cracks in the growth story out of China before we do see some issues there. I think when I look across, to the US, when I see the midterms, I think the market will be quite favourable towards Donald Trump, as he's a real sort of can-do type of guy. Well, that's how Wall Street's been treated at the moment. So I think there's going to be saying more rope towards what he needs to do to achieve what he needs. And remember, the US growth cycle is certainly there, and we're seeing a lot of demand out of that. So I don't think that's really going to affect the price of crude. I do see more of the geopolitical concerns being an issue, and that's obviously the fallout in November, Iran, but secondly about Venezuela and imposing sanctions on an already weak market. So I think they're the real concerns that I feel at the moment.
Sure.
Okay, all right, Jonathan, as well as Manisha, thanks very much for joining in and taking us through all of those views with regards to the crude space. But we need to focus on a couple of stocks. Capacity Infra has bagged orders worth around 675 odd crores. We have Rohit Katyal, the director and the CFO of the company, joining in to give us a quick a view on these orders. Rohit, hi, thanks very much for taking the time out. So if you could just tell us details with regards to these two orders that you've won, which groups are they from, when does execution start, when does it show up on your books?
Yeah, hi, good morning. The first order is from Piramal Realty, that is the Ajay Piramal Group. The contract value is 561 odd crores. The total area to be constructed is 3 million for the shell and core. These are basically 76-story towers and will be executed over 4 years. So the revenue will start from next quarter onwards and will pan out over the next 3.5, 4 years. The second order is a repeat order from Radius Group. This is for the first phase of the mall. And with this, our retail portfolio jumps to about 22% of the order backlog.
Okay. Can you give us a sense in terms of what your order book looks like with these incremental additions, and what might the pipeline for bidding look like for you?
So the current order backlog is approximately 6,500 crores, excluding the MADA project, which is being executed on an integrated basis with Tata Projects Limited. The execution period for the 6,500 crores is about 3.5 years. So that gives a sense of what revenue we are looking at year on year. So that's on the order front.
Okay. How are things looking, say, on ground? If you're talking about, say, a funding situation, working capital, and obviously with other real estate companies, are you seeing any sort of difference in terms of, say, order inflows or funding requirements, say, from 2 to 3 months ago?
Not exactly. If you look at the order built up as far as our company is concerned, we did about 2,700 crores last year. And in the current first 6 months, we have done 2,000 crores, excluding the MADA order. So there is a good traction. Basically, people who comply with RERA, and if you look at our order book, practically all the top-rated developers, whether you call them financial institutions, are there on the list. So as far as our company is concerned, we see a good traction as far as the order book is concerned.